So we've seen this great outdoor boom that has been afoot in large part thanks to COVID. And we've seen it across a number of retailers, a number of stocks. It's played out as well. Yours is no exception. Given the results you did just report, I guess, how much do you expect that strength and that focus by consumers to continue to do things like go outside and do things outside? Do you expect that to continue this year?
Yeah, we absolutely do. We think this is a very long-lived trend. You know, nobody's anxious, present company excluded, to wear a necktie and a coat, you know, to work. So
well,
we think
I'm with you. I'm with you, Tim. I'm with you. I just
I knew you would be.
It's mandated.
I knew you would be. But, you know, people who've been at home and been outside, able to go outside and feel healthy and enjoy themselves with their families, they're not going to go back to a formal way of life, in my opinion. There'll be much more activity outside, and we think we're positioned perfectly for that with all the brands that we have, but specifically with the Columbia brand, which is really very democratic and has really benefited from these new entrants into the outdoors.
Yeah, and just in terms of what you are seeing with consumer behaviors right now, I mean, do you feel like stimulus checks have helped boost some of the buying power by your consumers? Is it something else?
Well, we did definitely see a bump in business around the stimulus checks, but this has really been a long-term movement in the business upward, and we would expect that to continue. Again, people are enjoying themselves outside. It's a great place, very safe place to take your family, and I think people are recognizing that, and there's going to be a lot more of it to come.
What percentage of your sales do you expect and hope to be e-commerce sales in 5 years' time, Tim? Clearly, strong growth there in the last 12 months.
Well, that'll be interesting because, you know, frankly, even though we had a 20% or so of our revenues in the quarter were our own web business, e-commerce business, we have a quite broad business globally with retailers who have a significant component, some exclusively digital. So I would think that the amount of merchandise that's sold on the web by not only ourselves, but our customers who have web businesses is going to be very significant. Now, that's not to say that we're going to never see another store anywhere in the world. China, that business is quite strong. But I think the web is here to stay, and people feel very comfortable conducting business on the web.
We've been very focused on the supply chain disruptions we've been seeing, things like port congestion on the West Coast, which I know has affected a lot of folks that are importing goods, many of them going ultimately towards consumers as well. How has that affected your company? How are you navigating it? How long would you expect it to last if it is?
Well, it's hard to predict how long it'll last, and it really is a West Coast of the U.S. phenomenon. We bring some merchandise into the United States through the East Coast, through Savannah and other ports, but frankly, it's hard to know how long it will last. There's the whole issue with the disruption on where the containers are located. We haven't seen the kind of disruption in our European business that we've seen on the West Coast business here. So it's hard to know if it's going to be long lasting. We've built our models and really talked to our investors yesterday during our call to expect some disruption throughout the year in 2021, but we would expect that over time it's going to dissipate.
What do you put down as the main reason for the share price decline then today, Tim? I mean, some of the analyst questions seem to suggest the elevated SG&A costs going forward. Is that probably what's driving it, do you think?
Well, we guided to almost the historic high. If you take absent the early days of our public company history, and then 2019, we actually guided in a very healthy manner. It's very hard to run the business on a day-to-day share price view. I mean, we've taken the long view here. We have almost $1 billion in cash. We're a very strong financial company, and we have a good, clear sense of where we're going in a market that's growing rapidly. And, you know, I don't know what computer got turned on where or whatever. I really can't get focused on that. But all I can focus on is making the business better and bigger, and then the share price will come along as it should.
I wonder how you see Amazon, friend or foe, given the fact that there is a marketplace for Columbia on that platform.
Well, you know, it's interesting. We for years considered it to be almost a distraction, but we've really talked about how we harness the power of Amazon. And obviously it's a platform that people feel comfortable buying. They feel very comfortable interacting with that from a search perspective. And it's an area where we think globally there's probably appropriate business to be conducted there for us. We have to always be cautious. We don't want to have a huge customer someplace that drives what we do outside of our normal strategies. But consumers want to visit Amazon, want to search there, want to buy there, and we better be there when they want to be active.
Tim, thanks so much for joining us. Much appreciated.
Shepard Smith here. Thanks for watching CNBC on YouTube.